So, of all businesses, why do restaurants deserve ERC money? It's pretty simple. Restaurant owners and managers all over the country are starting to realize that they have access to a huge infusion of cash provided to them by a government benefit called the Employee Retention Credit, ERC for short. The sad part is that almost all restaurant owners have either never heard of the ERC program or they were given misinformation and decided not to file. This is how much you could be losing as a reference by not filing. If you had 10 employees, let's say, you could be losing up to $260,000 cash money. Okay. If you had 25 employees, you could be losing up to $650,000. 100 employees, up to $2.6 million. And you can go up to 500 employees and do that math, right? So to understand ERC in its simplest form, if you had W-2 employees during 2020 and 2021, you could qualify to receive a refundable tax credit for up to $26,000 for each one of these employees. It's not a loan and it never needs to be repaid. When you do the math, you're talking about a lot of money. Because it's a refundable tax credit, you will actually receive a physical check from the U.S. Treasury for the amount that you qualify for. This is not just some kind of deduction that you get to take from next year's taxes, right? This is real, cold, hard cash that you can use however you see fit. The funds do not need to be earmarked for business, for expenses, or payroll. They can be used anything that you deem appropriate, perhaps hire more staff, upgrade equipment, open a new location, or maybe you need that new Bentley delivery vehicle, right? Seriously, though, you could use the funds in any way that you want. You could take your family on a much-needed vacation because you've been killing yourself over the last several years just trying to keep things going. You could pay off your kids' college or buy some investment property. Maybe you just sock it away into some kind of savings or annuity to cover the future challenges that we may face as a result of our current economic situation. If you're feeling generous, donate it to a charity or a cause of your choice. It is completely up to you. And I get asked all the time. They say, Anthony, if it's such a great program, why aren't more restaurant owners filing for the employee retention credit? Well, there's a couple reasons that we hear most often. First of all, many of them just aren't aware of or outright forgot about the ERC program. You may have heard about it, immediately after the CARES Act was implemented, and you had to choose between filing for a PPP loan or ERC. Most businesses chose PPP because, well, it was just easier to qualify. You probably chose PPP. It was easier to qualify and as a result forgot about ERC. Or you were never told about your CPA to begin with because they knew it was just difficult. It was a very difficult thing to qualify for. Originally, you could only qualify for one or the other. It was either PPP or ERC, but not both. Okay. However, in December 2020, that all changed with the Consolidated Appropriations Act. Now, most businesses are eligible for ERC even though they took a PPP loan. This can be a big windfall. The other reason is just straight up misinformation. We get these calls almost daily. Business owners are frequently being given the wrong information about ERC. The two most common bits of misinformation. Number one is you don't qualify. A lot of people are told that. That's not true for a lot of you. Or number two, you already got a PPP loan. Because of that, you don't qualify. And let's talk about the part where it said you don't qualify. Before December 2020, let's understand that there was a single test for ERC that we used to qualify. It was called a significant decline in gross receipts. So in other words, you had to prove that you lost money compared to 2019 as a result of the effects of the pandemic. While we know, there's many restaurants that did shut down, many restaurants maintained or increased their revenue. If you maintained or increased your revenue, well, you just didn't qualify for ERC. However, the rules have changed. And a huge number of CPAs and bookkeepers still aren't even aware of the changes and are wrongly advising restaurant owners like you that you don't qualify. They're still only using the original test, but since December 2020, there are numerous qualifiers that make it much easier for most businesses to qualify. In fact, the IRS reported that 80% of all businesses qualify, yet only 3% of them have filed a claim. Okay, what about you already got a PPP loan? Well, it's kind of the same. As mentioned previously, before December 2020, you could only get one or the other, ERC or PPP, and that's changed. If you got PPP, you are still most likely qualified to get ERC. And even if you didn't get PPP, you can still very well qualify to get ERC. So what are the risks of filing for ERC? Well, one of the biggest risks is filing incorrectly, right? Resulting in an audit. This is going to be a big problem, I think, in the future. ERC is such a slippery slope if it's not done right, with thousands of pages of legislation, that one of our tax attorneys referred it to as an IRS unicorn. So unlike common IRS filings, the ERC program requires an even balance between understanding both the accounting side of it and the law side of employee retention credit. While most CPAs can handle the accounting portion just fine, they very often fall way short of understanding the legal aspects around the correct ERC filing. And likewise, lawyers, they're able to decipher the legal aspects of it, but they don't understand the accounting aspects of it and the IRS guidelines. And this can lead to incorrect and inadequate filings and be extremely detrimental to you, the business owner, in the future. They might also only calculate that you are entitled to half of what you're entitled to, or because of incorrectly calculating, give you too much money, and now you're set up for an audit. Okay, so when the ERC program comes to an end in April of 2025, let me ask you this. Do you think that the massive number of collection agents that the IRS is supposedly hiring are going to start looking through these files, through the ERC filings and the PPP filings? Yeah, absolutely. They probably are. And most likely, it's not because they want to figure out how to give you more money. So whoever does your filing should have a built-in audit protection. Like the firm that we recommend almost exclusively, they offer a 5-year look-back audit protection with no additional fees to you. I mean, it's built in. They'll be there when you need them, while others, will probably just vanish off into the ether as this thing, comes to an end. And this is also why a large number of CPAs and bookkeepers and law firms, and other people partner with us every day so that they can stay focused on what they're good at and let us do what we're good at. They let us handle the ERC side of it while they still stay focused on that side of it. So if you're one of those people, reach out to us. Also, undercutting yourself, right? This is another risk. It's not as much of a risk as it is an outright crime, in my humble opinion. While we've been helping business owners with their ERC filing since the very beginning of ERC, many people are now jumping on the bandwagon because it's being seen as a big money grab, right? After all, if somebody gives you free money, any amount of money, you're going to be happy, right? Yeah, of course you will. That is, of course, until you figure out how much you didn't get that you were entitled to because of a purposely cautious filing or an outright incorrect filing. Now, what do I mean by purposely cautious? Well, as we watch new companies come into the marketplace that offer ERC filing services, we became painfully aware of a trend that's happening every single day. There's companies advertising the service to get you excited about the possibility of free money, and maybe they're charging an upfront fee, they're charging a contingency fee, or a combination of both. So you sign up. After they do their analysis, they come back with numbers much lower than the $26,000 that you could potentially be getting. And we're not talking about a few thousand, but we're often seeing that they average around the 10,000 per employee range. Now, they do a good job of explaining this away. It's because of this and because of that and blah, blah, blah. And that's why you're only getting $10,000. And this is happening a lot. We're seeing this a lot. But it's a bit of a letdown to you because you're like kind of looking more at that $26,000 range, right? But it's still way better than zero per employee. So you take it. You never really give it a second thought. But what just happened was the company or individual who filed for you was purposely cautious and chose not to claim every credit you have available to you, or they didn't know how to claim every credit that you had available to you. And why would they do this? Well, it's simple. It's liability. You see, if they are aggressive, like the people we work with, and they file for everything that you are owed, and then you get audited later and you lose, well, guess what? You're going to sue them, right? You're going to say, hey, you guys messed up. You filed incorrectly. And, they don't want that risk. They don't want it at all. They don't ever even want to hear from you again. This way, if you get audited by giving you a purposely cautious filing, if you do get audited and the IRS determines that, in fact, you could have qualified for much more than $10,000 per employee or whatever the number is, they'll just laugh and they'll just leave you alone because they're not to help you get money, to get more money. They're there to try to get money from you, right? So anyways, they'll just end up leaving you alone. The problem is this is a huge disservice for you and for your company when somebody does this. When, I know years ago when I hired my first CPA, one of the things that we talked about was my home office and writing off my home office. And he asked me, had you written off your home office on the previous years? I said, no. He asked me why. I said, because I always heard that the home office was a big red flag for potential audit. And he laughed in my face and he told me, he goes, not if you do it right, dummy. You deserve every single penny of every single write-off and every credit available to you. And it was that day that I started asking myself, gosh, how much money had I let the IRS keep because of fear? It's stupid, right? Why do that if you're doing it right? But that's what these companies are doing. Don't let them do that. The company that we recommend, they're averaging $21,000 per employee across hundreds of thousands of employees that they have filed for. So understand, not 21,000 over a handful, over 21,000 over hundreds of thousands. And there's some reasons sometimes why it's higher and sometimes it's lower, but they're legitimate, accurate reasons of why those, amounts are what they are. But averaging 21,000 versus most other companies that are averaging around the $10,000 range, that's just a big gap, right? And the reason we average higher is because we just eat, breathe, and sleep ERC. It's not just an add-on. The company we recommend, this is what they do all day long. They have massive resources that they have just to ERC, as opposed to just having a bolt-on to an existing business, right? Like, okay, here's the ERC department. No, all they do is ERC. They're very accurate. They know where every penny comes from. They justify it with rock solid data. And so whoever or wherever you file with, make sure that you are filing with someone who is, this is all they do. They're experts at it. They're the best of the best. If you have questions about it, you want to schedule a call with me, let's talk. Give me a call. My number's on the screen or somewhere, or my website or whatever. You can find me that way, and we'll see what company is the best company for you. So I look forward to talking to you sometime in the near future. In any case, make sure you take advantage of the ERC program. Take care.